Photronics just delivered a monster quarter, and what they revealed about the future of semiconductor manufacturing might surprise you. From record-breaking high-end revenue to massive expansion plans, this earnings call was packed with insights that could signal major shifts in the photomask industry. Stick around as we count down the 10 most important takeaways you need to know. Coming in at number 10, we have flat panel display market recovery. After experiencing a temporary slowdown late in Q4 that extended into November, FPD demand has bounced back strongly. Photronics reported $58 million in FPD revenue and is seeing robust demand continuing through Q1. What's particularly exciting is their shipment of the first-generation 8.6 AMOLED orders, with more G8.6 demand expected as this technology expands into consumer and enterprise high-performance display segments. This larger format OLED technology carries significantly higher ASPs due to increased layer counts. At number 9, captive outsourcing trends are accelerating. Photronics is seeing increased interest from captive mask shops to outsource production, and this isn't limited to just the United States. The trend is global, encompassing less critical layers of advanced mask sets and memory products historically done internally. Given Photronics' strong positioning in regions with the largest captives and fabs, they're perfectly positioned to capitalize on this shift. Management noted that captives typically pay fair prices when outsourcing rather than bottom fishing for the lowest cost. Number 8 brings us Korea capacity expansion. Photronics is investing significantly in their Korea facility to support advanced logic foundry customers who are expanding their outsourcing policies beyond mature nodes into high-end and leading-edge applications. While they didn't disclose specific long-term agreements, management emphasized ongoing conversations about customer roadmaps and outsourcing demand, which drove the decision to expand Korean capabilities. At number 7, mainstream business is stabilizing despite challenges. While mainstream IC revenue in China declined 12% year-over-year due to geopolitical impacts and new local competition, Photronics is strategically pivoting. They're focusing on anchor customers with better product quality and support while redirecting capacity toward higher-value product mix, particularly 22nm and 28nm technology for critical, semi-critical, and non-critical layers that command much better ASPs than typical mainstream. Number 6 highlights the Allen, Texas facility benefits. This expansion will ramp in the second half of fiscal 2026 and deliver a dual benefit. First, it brings mid-range node capabilities that will generate incremental revenue and profitability. Second, and perhaps more importantly, it frees up capacity at their Boise facility for more leading-edge applications. This creates a multiplier effect where both sites contribute to growth simultaneously. At number 5, market share positioning looks strong. With Toppen now public, Photronics can better assess their competitive position. When including their FPD business, which Toppen doesn't participate in, Photronics is roughly the same size as their largest competitor. Management expects market share to continue increasing, particularly in the U.S. high-end and trusted mask segments, where they have unique advantages. Number 4 delivers solid Q1 guidance. Photronics expects fiscal Q1 revenue between $217 and $225 million, operating margin between 23 and 25%, and non-GAAP diluted earnings per share between 51 and 59 cents. This guidance reflects continued strength in high-end demand while acknowledging the inherently variable nature of photomask demand with only 1 to 3 weeks of typical backlog visibility. The bronze medal at number 3 goes to record high-end IC performance. High-end IC reached an all-time record in both absolute dollars and as a percentage of total IC revenue, hitting 42%. This represents approximately $66 million in quarterly high-end IC revenue. The strength was driven by U.S. reshoring efforts, with U.S. operations now representing 20% of total revenue, and sustained investment in hyperscale data centers for AI rollouts driving demand for the highest-end photomasks. Coming in at number 2 is a major CapEx investment cycle. Photronics is projecting fiscal 2026 CapEx of approximately $330 million, a dramatic increase from $188 million in fiscal 2025. This spending includes typical annual investments, incremental end-of-life tool upgrades that bring new capabilities and production efficiency, and special projects in the U.S. and Korea. All investments have been carefully vetted to meet return thresholds and align with major industry demand drivers including captive outsourcing, high-end node migrations, and geographic supply chain diversification. And finally, the number one takeaway is Photronics' unmatched U.S. trusted mass advantage. Photronics is the only U.S. headquartered company capable of producing trusted masks, and their Boise facility is the only commercial high-end U.S. trusted mask facility. With semiconductor reshoring accelerating and national security concerns driving demand for trusted domestic supply chains, this unique positioning gives Photronics an essentially unassailable competitive moat in what's becoming an increasingly strategic segment of the market. As one executive stated, demand in the U.S. has been particularly strong, validating their expansion initiatives designed to bring additional advanced production capacity to market. Drop your thoughts on Photronics in the comments below, and don't forget to subscribe for more earnings analysis from Earnings Central.